The impact of billionaires donating half their wealth. A shift in economic dynamics. If billionaires were required to donate half of their wealth, the global economy would undergo significant transformations. This bold move would not only redistribute immense wealth but also potentially reshape industries, philanthropy, social structures, and overall wealth inequality. Here's a breakdown of how the economy could change under this scenario. Wealth redistribution. A surge in philanthropy. One immediate consequence would be an extraordinary shift in wealth distribution. If billionaires donated half of their wealth, the amount of money flowing into charitable causes, nonprofit organizations, and social enterprises would soar. Causes like global poverty, education, healthcare, environmental conservation, and social justice would see substantial funding boosts. Many of the world's most pressing issues could see rapid progress, with resources allocated to solving problems that have long been neglected due to a lack of financial support. Economic stimulation. A boost to consumer spending. As billionaires relinquish a portion of their fortunes, the wealth would be funneled into the hands of governments, social programs, and individuals in need. This could lead to a rise in consumer spending as individuals with lower incomes gain access to resources that enhance their purchasing power. Increased spending could stimulate demand for goods and services, potentially boosting economic activity and job creation in sectors that cater to essential needs. Greater investment in public infrastructure. Governments receiving large donations or endowments could channel this money into public infrastructure projects, such as roads, schools, hospitals, and renewable energy. A well-funded public sector could reduce the strain on the middle and lower classes, potentially improving the quality of life for millions. Increased investment in infrastructure could also generate long-term economic growth, enhancing productivity and creating job opportunities across various industries. Challenges to private sector innovation. Billionaires often drive innovation in the private sector through investment in new technologies, startups, and cutting-edge research. A significant reduction in their personal wealth could mean a reduction in private capital available for these ventures. While philanthropic donations would support social causes, it could inadvertently stifle investment in high-risk, high-reward ventures that have the potential to reshape industries. This might slow technological advances or delay breakthroughs that could have long-term positive effects on the economy. Shifting corporate responsibility. A change in business strategy. Companies led by billionaires would likely adjust their business models to align with the philanthropic focus of their owners. There could be a noticeable increase in corporate social responsibility, CSR, initiatives, where businesses prioritize environmental sustainability, fair wages, and ethical practices to contribute to the greater good. This shift might result in higher operating costs in some sectors but could foster long-term sustainability and goodwill among consumers who prioritize socially responsible companies. Potential rise in taxation and government revenue. With an influx of philanthropic contributions, governments could take steps to adjust tax laws to compensate for the loss of wealth that had been traditionally taxed. These taxes could be redistributed to fund social programs or reduce public debt. Increased government revenue could enhance the capacity to address societal challenges, from unemployment benefits to healthcare reforms. However, balancing philanthropy with public taxation would require careful regulation to avoid inefficiencies and ensure the funds are used wisely. The wealth gap. Reducing or just reshaping? One of the primary goals of forcing billionaires to donate half their wealth would be to reduce income inequality. While this could narrow the wealth gap in the short term, it's possible that new structures of wealth could emerge. For instance, the donated funds might be used to create new social ventures or investment funds that could eventually be reinvested in wealthy pockets over time. Additionally, the ultra-wealthy may still hold significant power in shaping policy and creating economic structures that benefit them. Potential economic instability. While some of the wealth redistributed to the public sector would have positive impacts, sudden, large-scale donations could destabilize financial markets. Billionaires hold considerable stakes in major companies, and any significant reduction in their assets could lead to stock market volatility. This could undermine investor confidence, causing short-term economic disruptions as markets adjust to the new wealth distribution. Furthermore, the philanthropic donations could cause inflationary pressure in certain sectors, particularly if the money was not distributed effectively. Changes in global power dynamics. In a world where billionaires are required to donate a significant portion of their wealth, the political and economic power balance could shift. Governments, instead of wealthy individuals and corporations, might hold more influence in key decisions regarding public welfare. This could result in more equitable policies and reduce the power of private interests that have historically dominated government decisions. On the global stage, countries might also experience shifts in diplomatic and economic power as newly wealthy nations or sectors benefit from this redistribution. Rise of new social enterprises and innovations. Many of the donated funds would likely be channeled into social enterprises focused on solving the world's most pressing issues. This could lead to the creation of innovative businesses that are both profitable and socially responsible, providing essential services in areas such as renewable energy, education, and healthcare. The growth of these ventures could create new industries, promote sustainable development, and shift the focus from purely profit-driven businesses to organizations with a strong social mission. Impact on the motivation of future entrepreneurs. Finally, requiring billionaires to donate half of their wealth might alter the motivations of future entrepreneurs. While some might still strive to amass great fortunes, others may view wealth building with a stronger sense of responsibility, understanding that part of their success will be required to benefit society. This could lead to a generation of entrepreneurs who place greater emphasis on social value, potentially creating a more sustainable and ethical approach to wealth creation. Conclusion. A paradigm shift in wealth distribution. The idea of requiring billionaires to donate half their wealth would undoubtedly reshape economies worldwide. It would inject resources into vital social issues and could stimulate positive growth in areas like healthcare, education, and infrastructure. However, it could also come with challenges, such as reduced private sector investment, possible instability in financial markets, and the need for careful management of redistributed wealth. Ultimately, while this idea could contribute to a fairer society, its success would depend on how the wealth is distributed, managed, and utilized.